When it comes to healthcare global, it's part of your portfolio. Now also I can see it is one of the largest holding. What do you like in this company? Are you seeing recovery in diagnostics?
There are very few companies in our country, they are the leader.
When it comes to CDMO players, which all companies you like, Aditya?
Which has very high capabilities on the CDMO side. Then we own a company called. The third stock that we own in this space is, and the last but not the least, we own highest capability CDMO space in India.
Many investors are betting Laurus will have a recovery this year.
No, I agree. We were bullish on Laurus. I don't doubt the business model, but I disagree with the.
How do you read chemical as a space now? Because many companies corrected steeply.
Today, we are getting interested in the space. We are doing our work. These stocks can be potential multibaggers for us.
My viewers will get a lot of info today after watching this video on healthcare as a space.
Hi guys, welcome to Money Purse. Let's learn something new today. ఈ సంవత్సరం యాక్చువల్లీ బెస్ట్ రిటర్న్ ఇస్తాయి ఇన్వెస్టర్లు కానీ ఎక్స్పెక్ట్ చేస్తున్న సెక్టర్స్లో హెల్త్ కేర్ కూడా ఒకటి. ఇన్ఫ్యాక్ట్ ఈ 2025లో మాత్రమే కాదు, నెక్స్ట్ 5 to 10 yearsలో కూడా హెల్త్ కేర్ సెక్టర్ నుంచి మనం చాలా మంచి రిటర్న్స్ అయితే సంపాదించే పొటెన్షియల్ అయితే ఉన్నది. ఎందుకంటే మీరు బయోసెక్యూర్ యాక్ట్ గురించి విన్నారా? దాని రిలేటెడ్ యాక్చువల్లీ ఈరోజు వీడియోలో ఇంకా డీటెయిల్గా తెలుసుకోబోతున్నారు. అండ్ దానివల్ల వచ్చే ఇంపాక్ట్ ఏంటి, ఎటువంటి స్టాక్స్ లాభ ఉన్నాయి, ఇవన్నీ మీకు క్లారిటీ దొరుకున్నది. కాకపోతే ఈ హెల్త్ కేర్ సెక్టర్ ఏదైతే ఉన్నదో ఇట్స్ ఏ కాంప్లికేటెడ్ సెక్టర్. ఎందుకు ఇలా అన్నా అంటే మనకి తెలుగు స్టేట్స్ చెందిన వన్ ఆఫ్ ది లార్జెస్ట్ ఫార్మా కంపెనీ చీప్గా ట్రేడ్ అవుతుందని చెప్పి చాలామంది ఇన్వెస్టర్లు అయితే ఇప్పుడు బై చేస్తున్నారు. కానీ నిజంగా ఆ కంపెనీలో ఏం జరుగుతుంది అండ్ ఆ స్టాక్ ఎందుకు చీప్గా ట్రేడ్ అవుతుంది, ఇవన్నీ కూడా మీరు ఈ వీడియోని ఫుల్గా చూస్తే మీకు అర్థమైపోద్ది అన్నమాట. ఆదిత్య ఖెమ్కా గారు ఎవరైతే ఉన్నారో, మన ఛానల్లోని ఓల్డ్ సబ్స్క్రైబర్స్ ఎవరైతే ఉన్నారో ఆయన గురించి అయితే తెలుసు. ఎందుకంటే హెల్త్ కేర్ రిలేటెడ్గా ఐ ఫీల్ ఇండస్ట్రీలో ఉన్న ది బెస్ట్ ఎక్స్పర్ట్ అన్నమాట ఆయన. ప్రీవియస్గా మన ఛానల్లో 2 సార్లు ఆయన ఇంటర్వ్యూ చేసాం. నౌ ఇప్పుడు మళ్ళీ అగైన్ హెల్త్ కేర్ రిలేటెడ్గా మంచి ఆపర్చునిటీ కనబడుతుంది కాబట్టి ఆయన రిక్వెస్ట్ చేస్తే ఆయన మనకి ఇంటర్వ్యూ అయితే ఇచ్చారు. ఈ వీడియోలో ఆయన ప్రజెంట్ ఈ మార్కెట్ కరెక్షన్లో హెల్త్ కేర్ స్టాక్స్లో ఏ స్టాక్స్లో ఇన్వెస్ట్ చేస్తున్నారు అండ్ అలాగే నేను వేరియస్ అదర్ స్టాక్స్ గురించి కూడా అడిగాను. అంటే ఆయన పోర్ట్ఫోలియో లేని స్టాక్స్ అండ్ మార్కెట్లో బాగా బజ్ ఉండి ఎక్కువగా వినపడుతున్న హెల్త్ కేర్ కంపెనీస్ ఏవైతే వాటి గురించి కూడా అడిగాను. ఇన్ఫ్యాక్ట్ హెల్త్ కేర్ కాదు, ఈవెన్ అదర్ థీమ్స్ రిలేటెడ్గా కూడా డిస్కషన్ అయితే నడిచింది. వీడియోని చివరి వరకు చూడండి. డెఫినెట్లీ ఆ వీడియో చూస్తే యూ విల్ లవ్ ఇట్. ఓన్లీ థింగ్ మీరు పేషెంట్గా వీడియోని చూడాలంటే, వీడియోని చూసినట్టయితే డెఫినెట్లీ మీకు వీడియో నచ్చడం మాత్రమే కాకుండా మీకు నెక్స్ట్ 5-10 yearsలో మంచి డబ్బులు సంపాదించే ఇన్ఫర్మేషన్ కూడా అయితే తెలుస్తుంది. ఆదిత్య గారు నేను చేసిన ఇంటర్వ్యూ ప్లే చేసే ముందు ఒక విషయం అయితే చెప్పాలి గైస్. యాక్చువల్లీ ఆల్మోస్ట్ 3-4 months ఓకే కంటిన్యూస్ ఫాలో అప్ తర్వాత ఐ కుడ్ ఏబుల్ టు బ్రింగ్ హిమ్ అన్నమాట. సో ఇలాంటి ఇంటర్వ్యూస్ ఇవన్నీ కూడా చాలా ఎఫర్ట్ అయితే పడుతుంది. సో మీకు ఈ ఎఫర్ట్ హెల్ప్ఫుల్ అయింది. వీడియో చూసినప్పుడు ఏ పాయింట్ ఆఫ్ టైంలో ఇప్పుడు లైక్ చేయట్లేదు, మేము చూస్తున్నప్పుడు ఎప్పుడైనా కూడా నాకు ఎంతో కొంత వీళ్ళు వాల్యూ యాడ్ చేశారు అని మీకు అనిపించినట్టయితే ఈ ఛానల్లో మేము అడిగేది ఒకటే, వీడియోని లైక్ చేయండి. మీరు లైక్ చేసినట్టయితే యాక్చువల్లీ వీడియో ఎక్కువ మందికి అయితే రీచ్ అవుతుంది అండ్ అలాగే మీ ఫ్రెండ్స్ అండ్ ఫ్యామిలీకి హెల్ప్ఫుల్ అవుతుందంటే వాళ్ళకి తప్పకుండా షేర్ చేయడం మర్చిపోకండి. బై ది వే, ఈ 2025లో మీరు బుల్లిష్గా ఏ స్టాక్స్ మీద ఉన్నారు అండ్ ఏ సెక్టర్స్ మీద ఉన్నారో కింద కామెంట్ సెక్షన్లో కామెంట్ చేయండి. సో దట్ మన వ్యూవర్స్లో ఎక్కువ మంది ఏ కంపెనీస్లో ఇన్వెస్ట్ చేస్తారు అండ్ ఏ కంపెనీస్ రిలేటెడ్గా పాజిటివ్గా ఉన్నారు అండ్ ఏ సెక్టర్స్ రిలేటెడ్ పాజిటివ్గా ఉన్నారు అన్నది అయితే ఒక క్లారిటీ అయితే వస్తుంది. లెట్ మీ ప్లే ద ఇంటర్వ్యూ నౌ.
Hi Aditya, first of all, thanks a lot for giving us this time. I'm sure healthcare is one space, there is immense opportunity, and in fact last year this is the one sector which has outperformed many other sectors, and I'm sure the runway is much ahead. This must be the just early runway, and on top of it, first of all, congratulations to you, because the outperformance which you are delivering is superb. Okay, either on 1 year side, 2 year side, 3 year side, excellent outperformance when we compare with the sector. So that is one thing. And before we get into the entire content part, I want to put a disclosure, guys. Aditya, me doing this video is to give you the education on the most. Healthcare is one of the toughest sector to understand, and I feel Aditya is the best in this industry. I know many fund managers, but I personally know Aditya very well, and I rate him in the top when it comes to healthcare. So whenever there is something which I want to do in healthcare, I always go to Aditya. And people who are new, they might not know, but people who are old subscribers, they know Aditya is a first fund manager who is part of the fund manager interactions which we have done in the channel. And this is the third interaction which we are doing. We have no commercial relation. He's a good friend of mine. Okay, the only reason we are doing is to give you that education, and whatever companies or whatever examples which Aditya and me will be talking about, don't take it as a recommendation. Okay, you also do your study and research and take your own call. And one more thing, I'll tell all the new investors, see, healthcare is very tough sector to understand. It's not easy for anybody and everybody to understand the entire sector dynamics of it. So people who cannot understand sector, so instead of taking a direct stock approach, always it is better to take a fund approach in healthcare sector. People who can understand, they can take their own call.
Perfect. Thanks, Sai. Thanks for the opportunity, and it's my pleasure to be here.
Aditya, my first question. Okay, entire audience, there are many people who are very good in understanding complex topics. There might be new viewers who will not understand the majority of the complex topics. So, to make it simplify on the what is exactly happening on BioSecure Act, see, there is a lot of noise around it. What's your take, how the act works, and if the act passes, what kind of opportunity which we can see, and which all companies can get benefited out of it? If you can brief us around in detail, in simplest way, that will help my viewers a lot.
Sure, Sai. So let's get some context to the BioSecure Act. Okay, so the context actually begins in 1980s. So in 1980, India was the largest API manufacturer to the world. We were selling APIs globally. And China was not in the picture in terms of API production at that point in time. But India had pretty high cost in terms of effluent treatment, which is essentially pollution control. So what was happening was, if India was producing, let's say, API worth 100 rupees per kg, out of that 10, 15, 20 rupees per kg, depending on the product, was the cost of pollution control, right? Then came China. Post 1980, China came into the picture, where they had very large industrial parks, 10, 20,000 acre industrial parks. And they actually gave subsidized land, subsidized power, and they had very minimal infrastructure for pollution control, right? So what happened was that there was a clear cost arbitrage as a result, where the new companies that came up in China in early 1980s essentially were able to produce the same material for 80 bucks that we were able to produce for 100 bucks, simply because they had an arbitrage in pollution control, and add to that they had cheaper power, cheaper labor, and free land from the government. So these were the reasons why, over the last 4 decades, I would say from 1980 to 2020, India lost massive market share in API to China.
Yes.
Right. Now, today the situation is that China sells API and services worth about $40 billion. This is export numbers. And India sells about $4 billion. So you can see that China is about 10 times the size of India in that space today. Now, what has changed here is in 2020, COVID happened. Now, all of us know that in March 2020, WHO announced COVID as a pandemic. Very few people know that in August 2020, WHO approved a vaccine from China called CanSino as a COVID vaccine. Now, most people don't know that this was the first COVID vaccine to be approved by WHO. Now, the reason why most people don't know it is because once China got approval from WHO for the vaccine, they parallelly announced that they are not going to sell the vaccine to any other country till they don't vaccinate each and every citizen of their own country. Now, you can imagine, let's say if you are the United States President or the Indian Prime Minister or the British Prime Minister, you can imagine the pain with that, because you believe China gave COVID to the world, and now that China has come up with a vaccine, you wanted the vaccine on day one. And when you went to the Chinese government, they said, no, we will not sell. In fact, we will use all of it to first vaccinate our citizens. And only once we are done, will we be able to sell to the third parties, right? So that did not go down well, obviously, geopolitically, with all the Western Hemisphere and even many players in the Eastern Hemisphere of the world. So post that, what happened was India was actually the 5th country to come up with a COVID vaccine, but we were the first country to gift the vaccine. Forget about selling it to third party, we were actually gifting it to some of the countries. We gifted it to Bangladesh, we gifted it to Maldives, we gifted it to Burma, essentially countries that did not have the purchasing power of buying these vaccines from us. We gave them for free. And all this while our population was still getting vaccinated. Not that our population was completely vaccinated. We were getting vaccinated, but parallelly we were actually sending it to third parties so that they can also save their lives. So what was the messaging their side? China gave the messaging to the world, I am the enemy.
Yeah.
If I will use any leverage you give to me. India gave the messaging, I am the friend. When you are in need, you come to me, right?
Mm.
Now imagine today you being Trump or any Western Hemisphere global leader. What you believe is, or what you understand is that 80% of the medicines available today in your world, the back end goes to China.
Yes.
So, and in the current geopolitical turmoil, if any time China starts a Cold War or actual war with the Western Hemisphere,
Mm.
all China needs to do to kill your citizens is to stop selling medicines. Just the way
Mm.
they did not sell vaccines, just the way Russia did not sell energy,
Mm.
to European nations at the
Yes.
early times of the Russian.
Yes.
So that is scaring the global leaders now at a global scale because they know that China has the ability to weaponize medicines if the need arises, right? Now,
Okay.
that is where the BioSecure Act comes in, where the American government is saying that those American pharma companies which source their product or services from certain Chinese companies will not be allowed to bid for government contracts if they continue to source from China. That is the BioSecure Act. Now,
Okay.
the government business in United States is about 25% of the market. So if it's a $600 billion pharma market, around $150 billion is government business. So any American pharma company which is completely sourcing services and products from these few Chinese companies, they will not be able to participate in a $150 billion market opportunity. And no pharma company obviously wants to be, unable to participate in that opportunity. That is where the China plus one story comes in, where these American pharma companies have started developing an alternate vendor ecosystem, right, other than
Okay.
China.
Mm.
Now, when you're looking for an alternate vendor ecosystem, you're looking at the three C's. You're looking at
Mm.
cost,
Mm.
capability, and capacity, right?
Mm.
Now, the only country which can give you three C's which are anywhere close to what China offers you today is India. And
Yeah.
hence, Indian API manufacturers are by default benefiting from this China plus one. Now, the BioSecure Act has really been passed into an act yet. It hasn't been enacted into a law,
Mm.
but it need not be enacted into a law. See, if you are the
Okay.
CEO of any pharma company in
Mm.
United
Mm.
States,
Mm.
you are not paid to be reactive to legislation. You are paid to be proactive to potential legislation. Now,
Correct.
once the BioSecure Act became a potential legislation,
Mm.
already all CEOs of American pharma companies
Mm.
started diversifying their supply chain away from China. And
Yeah.
that is where all the Indian pharma API companies will benefit eventually. Companies which may benefit will include DVs, Laurus, Solara, Granules, Heikel, all the API companies. See, basically, China is 10 times our capacity in terms of
Mm.
services and products. We have four, they're $40 billion. So when market share comes shifts from China to India, all these
Mm.
companies will benefit. I
Mm.
can't imagine that any of these companies will not be able to participate. They will all participate. And yeah, some companies will benefit more, some will benefit less. That is where the stock picking abilities comes in. But I think across the Indian terrain, any API company that you pick up, they are doing capacity expansion. They have an order book which they cannot service with their current capacity, and that is really the opportunity of the BioSecure Act.
Fantastic, Aditya. You made it so simple that anybody can understand. Now I'll get into certain themes. Today I'll be talking predominantly on the healthcare part, but I'll also ask you a few other sectors as well. Okay, first thing, when it comes to your own portfolio, okay, your earlier when we had recorded that interaction, you're more of overweight on branded generics. Whereas now, when I see your portfolio, you're underweight.
Yeah,
Okay, what exactly happened in this period? And you're now more overweight towards hospitals. Okay,
yes,
are you comfortable in valuations? Because hospital stocks have run up really well.
right.
So you're still putting on overweight of this theme. So what's your take?
Sure. So let's talk about branded generics first. So why we were bullish on branded generics when we launched this fund sometime in 2021 was because branded generics were underappreciated by the market. As
Hmm.
in, the stock prices were at decent valuations, and there was a runway for growth for the companies, and we were happily riding the wave. So we had JB Chemicals at that point, we had Indoco Remedies, we had so many
Hmm.
other branded generic laboratories in our portfolio, including RPG Life Sciences.
Yeah.
Now, what has happened is, if you see, the valuations of these counters have actually gone through the roof. So the market
Yeah.
has actually agreed with our
Hmm.
philosophy that
Hmm.
branded generic is a better business model to be invested in. And today,
Hmm.
you pick up any branded generic stock, they are priced higher than unbranded generic stocks in terms of valuations.
Hmm.
So what has happened is that the thesis has played out with which we
Hmm.
entered the
Hmm.
branded generic universe.
Hmm.
We still believe there will be compounding returns in this space, but we don't believe that compared to current valuations, we'll be able to make very significant alpha to the benchmark if we remain over invested in branded generics, which is why we
Okay.
have come to sort of equal weight slash underweight, slightly
Mm.
underweight position in branded generics,
Mm.
right? So there's nothing negative in the business model. The business model continues to be robust. There will be earning growth. There will be cash flow. The only thing is the valuations today are at a level where we feel that an equal weight to slight underweight makes more sense compared to a significant overweight in branded generics. So
Mm.
that's simply the point of branded generics. Now coming to hospitals. So earlier hospitals were not appreciated well by investors, and
Mm.
we started investing heavily in hospitals when we saw that the hospitals ROE and margins have begun to improve. Now the
Mm.
reason why hospitals ROE and margins began to improve were twofold. One reason was that hospitals started to go on the asset light model. So
Mm.
earlier, Sai, when hospitals wanted to expand and create new hospitals, they wanted to buy the land and building on which the hospital stood. Now,
Mm.
that means a very high capex amount because land and building is expensive. And that
Yes.
also meant that if they wanted to expand fast, they had to take debt because you
Mm.
have to open so many hospitals and you are asset heavy, right?
Mm. Mm.
So which means that these stocks would be volatile, over a
Mm.
period because they will too much debt, new hospitals will
Mm.
contribute losses, and the picture doesn't look good.
Mm.
What has happened over the last 7, 8 years, we have noticed, is that most of these hospitals have started doing asset light expansion, where they are not buying the land and building, they're leasing the land and building. Now, because they're leasing the land and building, is it asset light? They're able to grow fast. The margins have been compromised because now they are paying rent. Earlier, they were not paying rent. So now they're paying rent. But the ROEs are higher because their asset
Yes.
light is, the asset base is very small.
Yes.
So that's basically turned around the hospital business for us. Now, coming
Okay.
to these are the reasons why the hospital space has done significantly well in the
Mm.
past 2, 3 years. Coming to why we are still overweight on hospitals, because we have been able to identify stocks where we believe valuations are still very, very undiscovered.
Okay.
So it's not just about the business model, it's also about the valuation layover on the business model. So the
Okay.
companies that we own, we feel these companies are available at 20 to 25 times operating cash flow. Whereas
Mm.
companies that we
Mm.
do not own trade anywhere between 50 times to 100 times operating cash flow within the hospital
Okay.
universe, right?
Okay.
So, for instance, I can give your viewers a data point. Max Healthcare is something we used to own when we launched the
Mm.
fund, and that made great money for us at a certain valuation. We felt uncomfortable. We got out. Today, Max Healthcare trades at 100 times operating cash flow.
Mm.
100. Their operating cash flow. And what we own, let's say, for example, Healthcare Global, that
Mm.
company trades at 22 times operating cash flow. So
Okay.
we don't see enough rationale for this kind of divergence in valuation to exist. And we
Okay.
believe that there will be convergence in valuations. Obviously, Max may cool off from 100 to, let's say, 50,
Mm.
60, 70. And SCG may re-rate from 22 to, let's say, 30, 40, 50. That only time will tell. But we clearly feel that there's this divergence which is not justified. And there will be some convergence in valuation multiples of different hospital stocks. So because we have been able to identify those hospitals which are trading at a very reasonable valuation, we believe the overweight stance makes sense.
Okay. When it comes to healthcare global, I know you like this stock from very long term. It's part of your portfolio from, and in fact, it is one of your top holdings. When I saw your portfolio, which you have built in Incred, now also I can see it is one of the largest holding. What do you like in this company, Aditya, other than the
Sure.
valuation part?
Sure. So one is obviously the valuation, as you mentioned. It
Mm.
is one of, I think, the most reasonably priced hospital stock today in India, right? So
Mm.
that's very, very comforting. So that gives us great margin of safety. Always remember,
Mm.
Sai, in my style of investing, in our style of investing, we focus a lot on margin of safety. We
Mm.
are very humble people in the sense that we have very limited ability to forecast the future. So what
Mm.
hence we rely on as a safety of capital is the
Mm.
fact that we enter stocks which offer us great margin of safety, which
Mm.
is HCG for now, and it was earlier branded generics 4 years ago. So
Mm.
the things keep changing because the stocks
Yeah,
keep moving, right?
true.
That's how the world is. Now, in HCG, what we really like, other than the margin of safety it provides at current valuations, is the fact that it is a super specialty company. Now, if you
Mm.
look at global healthcare side,
Mm.
the way global healthcare evolves in any developed market, it has evolved globally,
Mm. Mm.
is that it first begins with multi-specialty caregivers. So, like the
Mm.
Apollos, the Fortises of our
Mm.
country,
Mm.
globally also there are multiple hospitals and
Mm.
healthcare chains which are multi-specialty, right?
Mm.
But as the market evolves, as the audience becomes wealthier and they are able to spend more on healthcare, the emergence of super specialty happens. Now, what is the logic of existence of super specialty despite the presence of multi specialty? A very simple analogy can be in the restaurant space. So you can get a plate of noodles in a restaurant in Mumbai called Shiv Sagar. Now, the real specialty of Shiv Sagar is the pav bhaji and the sev puri that they serve, but they also have noodles on the menu. So if you want to eat noodles, you can go there. And that plate of noodles might cost, let's say, $150, let's say, right? But you also have a mainland China in Mumbai, where if you go and order a plate of noodles, it is $800 or $900. But that is a super specialty Chinese restaurant, and the quality of noodles that you'll get there would probably be very different than the quality of noodles you'll get at a Shiv Sagar in Mumbai, right?
Yeah.
So what happens is the same thing happens in healthcare. When people are able to spend more on healthcare, they want to go to super specialty chains. Why? Because the super specialty chains offer you better tech, better care in the same space. Because see, if you are a Max, for instance, I'm just taking it as an example. If you're a Max, you have 20 disciplines. You have gastro, onco, cardiac, nephro, and so on and so forth. Maternity,
Yeah.
you have 20 disciplines. So your focus is always to sort of excel at all 20 disciplines, right? And which kind of dilutes your focus on any one discipline, because you are sort of a jack of all trades, right? You're a one-stop shop. You're a jack of all trades. Whereas if you're an SCG, your focus is purely on that one segment. And because your focus is purely on that one segment, in that segment, whatever is the latest tech, the latest medicine, the latest diagnosis, you will have all of it, because you are just solely focused on it. So you are a master of one, right? And add to that, cancer is one of the fastest growing diseases in our country, right?
Yeah,
So because one of the fastest growing diseases of our country, so the audience population is also growing. So it's a mix of these factors, right? Great management is, the company is owned by PE, so professionally run, good quality management, good earnings growth, they're expanding rapidly. Valuation is very, very reasonable. Cash flow is very healthy. Working capital is negative. Cancer as a segment is a fast growing segment. So the TAM market is growing fast. And add to that, they are a super specialist. So they are, for foremost guys, I'll give you a data point for SCG. They are present in 16 cities today in India. Out of the 16 micro markets that they are present in 12 micro markets, they are the leader in the space. They are number one, 12 out of 16. In two, they are in top three. They are not number one, but they're either number two or three. And in two, they are outside top three. But these two, where they are outside top three, are the newer cities where they just established presence. So that gives you the ability of the management to get leadership in the market where they are present, right? Now, the same numbers for Apollo Fortis look very different. I'm not going to discuss those numbers here, but those numbers look very different for Apollo Fortis Max, right? So that also gives us the ability of the management to garner patient share, volume share from the market where they go. So all these factors make us, quite bullish on SCG as a stock.
The second theme which you are overweight on is diagnostics. Yeah, I agree with the valuation. See, when it comes to COVID time, diagnostics were actually one of the loud theme for market. But post COVID numbers cooled off. All these stocks have corrected and nobody was looking at it. But now, yes, valuations definitely looks really good. And are you seeing the recovery in diagnostics, and what kind of recovery which you are seeing?
Yeah, sure. Thanks. So again, let's go back to COVID times when we first recorded, this interaction between you and me in 2021. If you remember, at that time, we had no diagnostic in our portfolio.
Yes.
Now, the reason why we did not have diagnostic stock in that portfolio at that time, because we were saying that the normal diagnostic business is not happening. There is RT-PCR and antigen test happening. And those revenues and profits are given 60-70 multiple.
Yes.
And we are very uncomfortable with that, because we didn't expect COVID to last 60-70 years. We did not know whether it will last 3 years, 4 years, or 10 years, but we were not expecting COVID to last 60-70 years. So we were out of diagnostics completely when we last reported them. And then what happened? Obviously, COVID went out of the picture, and these diagnostic stocks started reporting YOY decline in revenue and profitability. Why was that happening? Because the RT-PCR antigen stream died off, whereas the normal stream came back. The normal diagnostic test of your normal test of accidents and what have you, regular health checkups, that stream came back. But YOY the numbers were looking bad, because RT-PCR was a much higher base than the normal revenue base that these companies do. So we started adding diagnostic stocks when the YOY numbers were looking bad, but we knew that the sustainable cash flow is now coming back, because now the business that they are doing is the regular sustainable, health checkup, etc., which these diagnostic labs do. right? So that is when we started adding, and the valuations, as you know, they had fallen steeply. So the margin of safety was very high at that
Yes.
point in time. Well,
Yes.
so that's when we started adding. Now, to give you some points on why we are bullish on diagnostics as a sector. So 85% of the diagnostic market size is unorganized. 15% market is organized. Let me give you another data point, which Thyrocare talks about in their presentation. They say, so they are the source of the data that I'm giving you. They say that only 2% of the samples treated in India, 2% of the diagnostic samples treated in India are treated in a NABL certified lab.
Okay.
Only 2%. Now, NABL
Only
is a
2.
certification of quality
Yeah.
given by the government of India, right?
Yes.
It's like the ISI mark in case of
Mm.
electronics.
Mm.
Which means if you are a patient in India, there's a 98% chance that the sample that you are giving to a phlebotomist is going to a lab which has no guarantee of quality. But you will nonetheless be treated on the basis of the report that the lab generates. Right. So our bet is that this 2% market share of NABL certified labs will grow dramatically over the next 2 to 3 decades.
Okay.
Because people are becoming more and more aware of quality. As I said, higher disposable income, which means more spend on healthcare. More spend of healthcare will become translate into higher demand for quality treatment, which is what will happen in a stock like HCG, which is what will happen in stocks like Thyrocare, for instance, who are NABL certified themselves. So our call is that other than the obviously the should I say margin of safety that diagnostic gives us today in terms of valuations, we also see a very high growth scenario for these companies in the next 10 to 20 years, because there are very few companies in our country who are diagnostic and NABL certified, and therefore have a carry a stamp of quality, trust with them. And remember, Sai, I always say in healthcare, cost is secondary, trust is primary.
Yes.
So if you are somebody who the patient or the doctor trust, you will never be short of business. That I think is a primary cornerstone of our investment thesis in healthcare. So I think these NABL certified labs have the trust today of the physicians, of the patients, and they are just going to increase the awareness manifold regarding their quality. So if you look at, let's say, for instance, if you go for a diagnostic test in Thyrocare, and when you get the report, there's a red stamp on the report which says NABL certified. Right. So they are themselves advertising through their reports that we are NABL certified.
Okay.
Right. And then we compare those results with another lab report. And that lab report will not say NABL
Will not
certified.
have. Yes.
So you will know, right? As a patient, as a physician, you will know. So I think this is a long runway for growth in diagnostics, and therefore we continue to be very, very optimistic.
Okay. And when it comes to Thyrocare as a company, we have discussed because see, are you comfortable with the new management? Because post the new management took over, there is a lot of negativity around the company. So what's your take here?
So look, Thyrocare management and promoters now need to be differentiated. Okay, so Thyrocare is owned by API Holdings, which runs Pharmacy as an app, and they own 71% in Thyrocare. Whereas the management of Thyrocare is a professional team. So Mr. Rahul Guha, who is the CEO and MD of Thyrocare, is a professional, is coming from a consulting background. Mr. Alok Jagnani, who is the CFO of Thyrocare, he is also coming from a very decent background, and you know they have very little to do with the API holding business. So I think we are very, very comfortable with how the business is being managed. Obviously, margins of Thyrocare pre-acquisition used to be 40%, which has now come down to 27, 28%. But there are reasons behind it. So pre-acquisition by Pharmacy, Thyrocare was not NABL certified. Now they are NABL certified. So 4-5% margin goes there. Pre-acquisition, there were 3,500 pin codes covered by the company. Today, there are 9,000 pin codes covered by the company. So when you expand pin codes, obviously operating costs come front and revenue will come later. So there will be some pressure, right? Then earlier management did not used to take a salary from Thyrocare. The current management takes, obviously because they're professionals, they take salary. So that results in lower margins. So we feel whatever margins Thyrocare are doing currently, there is scope for expansion by operating leverage through when they establish good presence in the new pin codes. But barring that, I think Thyrocare will continue to be a very good growth story for us. And we are comfortable with the strategy of the new management.
Okay. And Aditya, one question, like when you actually take a call on a company, what kind of filters which you keep? Because healthcare is something where many of the investors will have interest, but they'll have a little idea on what kind of filters which they need to keep. So what kind of filters which you keep when you're adding a stock?
Sure. So there actually our stock investing framework has 10 variables into it, right? So we have 5 quantitative, 5 qualitative variables. But I'll take you through the key ones, so as not to take too long. So the 2-3 key variables in the quantitative framework is one, we look at the last 10, 20 year, as much history as available for the company. Is their return on invested capital beating the cost of capital? That's first filter. That are they consistently beating the cost of capital through their return on invested capital, which means does the business justify an equity investment? That's number one. Number two, second filter we take is whatever profits they are showing on P&L, does that translate to cash flow? So there is a ratio that we calculate. It's called cash flow from operations divided by EBITDA. So whatever EBITDA they are reporting should translate to cash flow from operations. There should be cash that they're able to generate. Remember, Sai, the value of any asset is the present value of future cash flows, not future EBITDA, not future profit after tax, but future cash flows.
Cash flow.
So
Yes.
the focus on so the focus on EBITDA and PAT that the street has, I think, is far too diluted. I think that focus needs to shift to cash flow rather than EBITDA and PAT, right? So which is why we continue to focus more on cash flows. So that's the second quantitative thing that we take, the parameter that we check. The third quantitative parameter, which we feel is very, very important to look at, is how does the company grow over the past 10 years? How has it grown organically? What is the volume growth? What is the price growth? What is the sustainability of that volume and the price, right? So these are like the key three parameters we look at. Then the qualitative parameters that we look at the management's interest in running the business. So for instance, there are certain managements which run multiple businesses, including the one which is listed. So there the management's attention may be diluted because they're looking at 5 businesses instead of one. Then we look at management's alignment with minority interest. That is about management's reputation. So in history, have they done what they had guided? What kind of salary do they take? Are they just taking salary so that they can loot the cash flow as much as they can? Or are they taking salary which is justified by the standards of other companies in the area, in the space? So there are multiple sort of filters that we put, but these are some of the important ones that I told you. Are there related party transactions that the company does, right? Multiple such filters we put. So it's a very broad framework. We have 10 variables, as I said. I've discussed, I think, 5 or 6 with you. But these are kind of variables that we use to ascertain the fact that whether the company is investable. This is a screener that we run. Now, the companies which qualifies on these criteria, then we do our work as to what kind of growth they can see, what kind of cash flow can they make, and then what is the valuation today the company is at, and does it make sense hence to sort of bet on the company. That is the way we select stocks.
And Aditya, recently there are many health tech companies which are getting listed. Have you looked into them, and what's your take there?
Yeah, so we have looked into it. It's a very, very interesting space. Health tech, I think, is going to be very big in the next couple of decades in India. The only place where I again disagree, we don't own any health tech stock in our portfolio yet. And the reason why we don't own them is probably because of valuations, because we're not comfortable at the valuations at which they're trading today. I think it's far rich. I think health tech is a space that will take its own time in terms of growth. Today's valuation multiples probably do not justify or reflect that gestation period of health tech.
Okay.
So I think that's the reason why we don't own it.
Okay. I know being an active manager, your view gets changed over a period of time on many themes. Yes. But currently, when I see your portfolio, I can't see any of the health insurance companies. Earlier, it used to be part of your portfolio. Why are you not liking them now? And what are you seeing in health insurance as a theme?
No, health insurance is a theme we continue to be bullish, but I think, again, what prevents us in adding any health insurance stocks today to our portfolio is the valuations. I think the valuations leave little upside. We earlier used to hold ICICI Wockhardt as one of the health insurance companies, but the stock has done pretty well for us. We have booked our profits in the name, and we still like the business model, but we don't like the valuations at which the stock is available.
Okay.
Yeah.
Got it. And Aditya, on few API companies, like for example, if you have to talk about Natco Pharma, what's your take here? Because the valuation side and all, many investors are getting attracted because it's trading at very low PE multiple. But how do you read this business?
See, I think, and this is not numbers that Natco discloses, this is just my understanding. Let's assume if Natco has around 1,600 crores of profit today, or I think they have close to 2,000 crores of profit today. So if they have around 2,000 crores of profit today, in our estimates, 1,000 crore of that profit comes from one drug, which is Revlimid in the US. And that drug's profit from 1,000 crores per annum will probably fall to 10 crores per annum starting Feb 26. So, that cash flow has only longevity of less than 1 year now, right? So that 1,000 crores we should keep aside. I should get only 1 value multiple because it is only going to last for
1 year.
Then there is one product that they sell called Copaxone. Again, in our estimates, Copaxone generates 350 to 400 crores of profit after tax for Natco. So that another, and that cash flow may last 3 years, may last 2 years, difficult to say, but will definitely not last 10 years, right? So it may
Okay.
last 2 years, may last three, may last 4 years also. So let's give a 5 per multiple to Copaxone's profit, which is let's say around 350 crores or 400 crores for calculation's sake, 400 crores. So 400 into 5 is 2000 crores
Yeah.
valuation. 1000 crores of Revlimid into one, that is another 1000 crores of valuation.
Yes.
Now, if Revlimid is 1000 and Copaxone is 400, so the balance profit is 600 crores. Now, in this 600 crores, let's say it's a recurring business, right? So this recurring business, we can give a multiple of, let's say, 30 times. So 30 into 600 gives me 18,000 crores plus 2,000 crores for this Copaxone is 20,000 crores and plus 1,000 crores for Revlimid is 21,000 crores. I think the current market cap of natco is around 28,000 crores. So although optically it looks cheap because of the contribution of Revlimid being 1,000 crores, but once that 1,000 crore goes away, natco stock will start looking expensive.
Okay, got it. Fantastic. And Aditya, okay, and you would have already you must be tracking this company called Sai Life Sciences, which has come as a recent
We do.
IPO. And how do you compare Sai Life Sciences with Syngene or many other CDMO companies?
Sai is a great company, no doubt. It's a company which has very high growth potential. I would place in terms of capability maybe Syngene above Sai because Syngene has a lot more high-tech capabilities compared to Sai Life Sciences. But Sai in its space is also a very good player. Again, where we disagree with Sai, where we don't own Sai, is because the fact that the valuations today leave very little room for upside. There's a very high growth that is expected in Sai, and I think the valuations already discount that growth. So if Sai for any reason falters on that to deliver on that growth, the stock will see some downside rather than making money for us. So anyways, we have a philosophy where in these new IPOs, we wait for the companies to perform for a year or two. We don't jump at these names during IPO. We generally wait for a year or two for the companies to perform, and then we take an informed call on their business quality, their execution, and all that. So from that standpoint, also we don't currently, evaluate Sai as an investment. We would like to see them perform for the next year or two, and then take a call on the stock.
Okay. When it comes to CDMO players, which all companies you like, Aditya?
So the companies that we own in the CDMO space side today are Jubilant Pharma. That's a company which has very high capabilities on the CDMO side. Then we own a company called Hikal, HIKAL. They have CDMO in the veterinary space, an API space, as well as crop protection space. So they have multiple CDMO capabilities. The third stock that we own in this space is Vimta Laboratories, VIMTA, Vimta, Hyderabad-based.
Yes.
Vimta is a food and pharma processing company, which also has a clinical research arm. So they are doing fairly well. And the last but not the least, we own a Syngene, which is again, as I said, the highest capability-oriented company in the CDMO space in India.
Okay. And many investors are betting Laurus will have a recovery this year. What's your take here, Aditya? Because you were also very bullish on Laurus at one point of time.
No, I agree. We were bullish on Laurus, but the stock, ran sort of ahead of its capabilities at a point, and we booked our profits. And today, in hindsight, it was a good thing to do because the stock from there fell significantly, and then now it has recovered recently. I think in Laurus, a lot of the expected growth is already in the price, and which is where, again, just like Sai Life Sciences, I don't doubt the business model of Laurus. I don't doubt their execution capability, but I disagree with the valuation that the street is currently ascribing to the stock. So I think the current valuation leaves room for downside in case the company has any disappointment in terms of expected earnings. And in such cases, the downside tends to be more than the upside for a potential investor. So we tend to avoid those stocks.
Okay. And 2, 3 more questions, Aditya. How do you read chemical as a space now? Because many companies corrected steeply. Are you seeing any early signs of recovery here?
So, Sai, we were very clear in FY 21 to 23, we had no chemical stocks in our books. Because we were very clear the reason these chemical companies were making money was not because they were specialty or anything, just because their largest competitor, which was China, was not able to supply. And hence these guys were able to sell more at a higher price. So that was a very clear sort of trend that we were noticing, and we avoided the space completely. Today, we are getting interested in the space. We are doing our work. But we are not yet convinced as to which of the chemical stocks or which of the chemical businesses truly have a moat, right? Because now what has happened is that China has started dumping, and the prices of many chemicals, including agri-chemicals, have just completely collapsed in the last 2-3 years.
Yes.
Now, what we want to still see evidence of is those chemical companies where the pricing has not been affected by China dumping. And
Okay.
that is where we will really be keenly interested. So we still don't have any chemical companies, although the margins have fallen, the revenues have fallen, the valuations have not corrected as much. So if the earlier when the stock doubled, the profit had
Hmm.
gone up 50%, the multiple had gone up 50%, which is why the
Hmm.
stock doubled. Now the profit has gone down by 50%, so it has
Hmm.
been reset. But the multiple is down only 10%. It has not fallen 50%. So which is
Okay.
what we are waiting. We are waiting for the multiples to also correct. Eventually, we it has to offer us margin of safety because this is a
Hmm.
space where there's a lot of unknown variables and a lot of global influence in the business model. And to be able to take that risk, we need that kind of compensation and reward. And at the current valuations, that kind of reward just doesn't appear to be there.
And one more thing, Aditya, in healthcare space, there is one more stock which is making a lot of buzz is Wockhardt because of their
Yeah.
recent drug innovations and all. What's your take here?
Yeah. So Wockhardt obviously has, I think, has got a very good portfolio of antimicrobials. They talk about WCK-522 as their lead
Yes.
candidate. If this molecule gets Western world approval, which includes Europe, Japan,
Hmm.
even US, this molecule can be really, really big. It can be $1 billion plus sales molecule, but it is a binary event, right? Either the
Hmm.
molecule will get approval or it will not get approval.
Hmm.
So for investors who are investing in Wockhardt today, if the molecule doesn't get approval, there is a downside in the stock.
Yes.
One could lose 30-50% of their
Easily.
invested capital in the stock. Similarly, if the molecule gets approval, you may make 70%, 80%, 100%, depending on how far the stock goes, right?
Hmm.
For us, that kind of risk reward is not good enough.
Okay.
And we generally avoid binary outcome plays. 0-1
Okay.
games, or binary outcomes, approval, no approval, that's it. We don't engage in that because we don't like to lose capital for our clients. We are okay to let go of some multi-baggers. We have done that in the past also, where we
Okay.
were aware that it could be a multi-bagger, but we have let go of the opportunity because there was equally high downside also in case the
True.
thesis doesn't play out. So, we are okay to let it go. So similarly, today in Wockhardt, we are happy to let it go.
Okay. And other than healthcare, Aditya, in current market condition, which all sectors, themes you like? Like if you want to invest your own money other than healthcare, so which sectors you're comfortable investing right now?
So today, Sai, we are investing in NBFCs, MFIs. We feel this is a space which has been beaten down completely
Hmm.
in terms of valuations. And, RBI obviously has been sending a lot of tough signals to this industry,
Hmm. Hmm.
increasing risk weight, tightening liquidity, tightening uh, asset quality norms and all that. So very clearly, this is a space where the sentiment today from an investor standpoint is bottoming out. In my view, it's a space where people don't feel there will be any growth in future. And if you look at the valuations, the companies which used to trade at 5-6 times price to book are currently
Hmm.
available at 1 to 2 times price
One
to
to
book.
two
Right?
times,
Some
yes.
are even below one.
Yes.
Some are even below 1 time price to book. Right?
Even
So this is
companies like affordable housing, where the risk is pretty low, they are also trading very cheap.
absolutely. Company with 60, 70, or even 100% secured book. There
Yeah.
also the valuations have completely sort of fallen down because there is no earning growth or there is no loan book growth, AUM growth at this point. But we feel this is a sector that is inevitably will do better, right? Because it is linked to the GDP growth of our country. So
Hmm.
if our country has to grow in real GDP growth 5% plus, this is a segment that has to participate in that growth. Without this segment participating in that growth, that kind of GDP growth cannot come through. So I think the better quality companies which have better underwriting skills, better quality of assets, better asset and better liability franchises, that kind of companies will create significant wealth from this point onwards in the NBFC space. So that is one NBFC slash MFI space. So that
Okay.
I think is one space where we're pretty bullish at this point. We are buying a lot of stocks in that space today in the funds that
Okay.
I manage.
Okay.
Another space where we are adding a lot of stocks is consumption. So again,
Okay.
last 2-3 years, consumption has not really picked up,
Hmm.
be it the QSR space, be it the
Hmm.
apparel retail space. The volume growth has not been significant,
Hmm.
and because of
Hmm.
which these stocks again have been beaten down.
Hmm.
But look, that's just a cycle, right? It's a macroeconomic
Yes.
cycle. So every macroeconomic down cycle, you will see consumption taking a beating, and every
Yes.
macroeconomic up cycle, you will see consumption
True.
skyrocketing. So I think again we are at the bottom of this, or close to the bottom of the down cycle in consumption of the current cycle. And as we see better SSG, better volume growth for these consumption-driven companies in the next few quarters or couple of years, these stocks can be potential multi-baggers for us.
Okay, fantastic. And when it comes to consumption, okay, one more company which comes into my mind, which is into healthcare as well. So predominantly they actually are into healthcare. MedPlus as a retail chain, Aditya, they are adding many stores, and they also got into diagnostics. Of late, actually, they are not expanding that in that space. What's your reading here on this company, retail chains?
No, we like the space in retail chains. What we do not like in retail chains is exactly the amount of cash flow that these companies generate. Okay. So if you look at
Okay.
MedPlus, my guess is that their multiple to cash flow is around 70 times today, right? So they're around 9,000 odd crores in market cap. And their cash flow last year, I think, was around 140 crores odd. So 70, 60 times cash flow is what the company is trading at. I think that kind of valuation multiple is not something that we are
Okay.
comfortable with
Got it.
because we're getting diagnostics hospitals at 25, 30, 20 times cash flow. So why
True.
should we spend 60, 70 times cash flow on a retailer, right?
Obviously. And there are few companies like which are into CMO, more of a contract manufacturing, job work kind of companies.
Yeah.
There are few market leaders in that space are getting listed, got listed in last 1 year. Okay.
Yeah.
What's your take here, Aditya, on these
I
companies?
like the business model of these contract manufacturing companies. Specifically, we're talking about Akums, you're talking about
Mm.
Windless Biotech, Innova
Yeah.
Captab. These are good quality businesses, to be honest. Again, my disagreement is with the valuations. So
Okay.
look, in a contract manufacturing business that these guys run, the bargaining power is with the customer because the
Yes.
customer owns the brand of right.
True.
So the customer is selling the product. You are just doing a job work. Now,
Yes.
when you are a job worker, there is a certain margin and a certain ROE that you will be allowed to maintain. Beyond that, the
Yes.
customer will not allow you to make money.
True.
And hence, the valuations that these stocks currently trade at do not discount the probability that their ROE or margins are probably not going to expand. They're going to stay
Mm.
where they are because
Mm.
that is the
Mm.
kind of margins the customer is allowing these job workers to make. So, from that standpoint, I think the stocks are a little expensive today because I
Okay.
think the street is believing that these guys, because they are contract manufacturers, they will behave like CDMO companies, which are contract development and
Mm.
manufacturing guys, contract
Mm.
manufacturers. They're contract developers as well. These
Yeah.
guys are contract manufacturers, they are job workers, right?
Yeah.
So for them, the margins and ROE will always be capped. For the CDMO guys, the margins and ROEs can be significantly higher because there is a certain IP, attached to what they do. But in CMO, there is generally no IP attached to what they do.
Fantastic conversation, Aditya, and thanks for giving time to us.
Thanks, Sai. It was a pleasure talking to you, and I hope we continue to interact, and I hope the space continues to do well.
Sure, Aditya.
ఇంటర్వ్యూలో కీ పాయింట్స్ని ఇప్పుడు తెలుగులో సమ్మరైజ్ చేస్తాను. అండ్ బై ద వే ఇప్పటివరకు వీడియోని లైక్ చేయడం మర్చిపోయినట్టయితే వీడియోని లైక్ చేస్తూ మీ ఫ్రెండ్స్ అండ్ ఫ్యామిలీ మెంబర్స్కి వీడియో హెల్ప్ఫుల్ అవుతుంది అనిపించినట్టయితే వాళ్ళకి తప్పకుండా షేర్ చేయడం అయితే మర్చిపోకండి. అండ్ ఛానల్కి అయితే ఫస్ట్ టైం వస్తే సబ్స్క్రైబ్ అయితే చేసుకోండి. ముందుగా బయోసెక్యూర్ యాక్ట్ గురించి ఆదిత్య ఖేమ్కా గారు ఏమంటారంటే 1980 కన్నా ముందు యాక్చువల్లీ ప్రపంచంలోని మెజారిటీ ఆఫ్ ద ఫార్మా కంపెనీస్కి ఇండియా నుంచి ఏపీఐస్ వెళ్ళేవి. ఇండియా వన్ ఆఫ్ ద లార్జెస్ట్ ఏపీఐ మ్యానుఫ్యాక్చర్. వెరస్ దాని తర్వాత చైనీస్ గవర్నమెంట్ తీసుకున్న డెసిషన్స్ వల్ల చైనా వన్ ఆఫ్ ద లార్జెస్ట్ ఏపీఐ మ్యానుఫ్యాక్చర్ అయితే అయిపోయింది. మన ఇండియన్ మార్కెట్ షేర్ మొత్తం వాళ్ళు గ్రాప్ చేసేసారు. అండ్ ఇప్పుడు చూసినట్టయితే మోస్ట్ ఆఫ్ ద ఫార్మా కంపెనీస్కి ఏపీఐస్ చైనా నుంచి వెళ్తాయి కదా. నో అసలు ఈ కోవిడ్ టైంలో ఏం జరిగిందంటే కోవిడ్ వ్యాక్సిన్ని ఫస్ట్ యాక్చువల్లీ WHO అప్రూవ్ చేసింది చైనీస్ వ్యాక్సిన్ అది. కాకపోతే చైనా ఆ వ్యాక్సినేషన్ మొత్తం వాళ్ళ కంట్రీలో అయిపోయిన తర్వాత ప్రపంచం మొత్తంకి ఇస్తామన్నది. వెరేజ్ మన దేశం విషయంకి వచ్చేసరికి కోవిడ్ వ్యాక్సిన్ ఇన్నోవేట్ చేసిన కంట్రీస్లో మనది 5th పొజిషన్లో వస్తుంది. 5th పొజిషన్లో ఉన్నా కూడా ఇండియా తన గురించి మాత్రమే కాకుండా అంటే మన ఇండియన్స్కి వ్యాక్సినేషన్ ఇస్తూ ప్రపంచంలో ఉన్న చాలా దేశాలకు కూడా మనం సహాయం చేసాం. ఫ్రీగా వ్యాక్సిన్స్ని కూడా ప్రొవైడ్ చేసాం. దీంతో యాక్చువల్లీ ప్రపంచంలో ఉన్న వేరియస్ కంట్రీస్కి వచ్చిన మెసేజ్ ఏంటంటే చైనా ఈజ్ ద ఎనిమీ వెరస్ ఇండియా ఈజ్ ద ఫ్రెండ్. అండ్ చైనా మీద డిపెండెన్సీ అనేది చాలా రిస్కీ అన్న మెసేజ్ అయితే స్ట్రాంగ్గా వెళ్ళిపోయింది. అందుకని ఏ కంట్రీకి ఆ కంట్రీ మనం మెడిసిన్లో చూసినట్టయితే బ్యాక్వర్డ్ ఇంటిగ్రేషన్లోకి వెళ్తే అగైన్ ఏపీఎస్ చైనా నుంచే మోస్ట్ ఆఫ్ ద కంట్రీస్కి వెళ్తున్నాయి. అండ్ ఆ కంట్రీస్లోని ఫార్మా కంపెనీస్ అని కూడా చైనా మీదే డిపెండ్ అయ్యి ఉన్నాయి. కాబట్టి రేపు ఎటువంటి వార్ జరిగినా కూడా చైనా ఈ ఏపీఎస్ని సప్లై చేయడం ఆపేసినట్టయితే వాళ్ళ కంట్రీలోని జనాభా చాలా ఎఫెక్ట్ అవుతారని గ్రహించిన అగ్రరాజ్యాలు వాళ్ళ ఏపీఎస్ ఏవైతున్నాయి ఒకే కంట్రీ మీద డిపెండెన్సీ ఏదైతే దాన్ని తగ్గించుకుని వాళ్ళు యాక్చువల్ సప్లై చైన్ వేరియస్ అదర్ కంట్రీస్ నుంచి కూడా వాళ్ళు తీసుకోవడానికి అయితే ప్లాన్ చేస్తున్నారు. ఈ యాక్ట్ ఇంకా పాస్ అవ్వడానికి టైం ఉన్నది. కాకపోతే ఫార్మస్యూటికల్ కంపెనీస్ ఒక సీఈఓలు ఎవరైతే ఉంటారో ఇలాంటి యాక్ట్లు వస్తాయంటే యాక్ట్ వచ్చే వరకు వాళ్ళు వెయిట్ చేసి దాని తర్వాత వాళ్ళు రియాక్ట్ అవ్వరు, వాళ్ళు ప్రోయాక్టివ్గా ఉంటారు. సో ముందుగానే డైవర్సిఫికేషన్ అనేది ఏదైతే ఉందో సప్లై చైన్ రిలేటెడ్గా అది వాళ్ళు డెసిషన్స్ అయితే తీసుకుంటారు. దాని రిలేటెడ్గా ఆల్రెడీ మన ఏపీఐ కంపెనీస్కి అయితే చాలా లార్జ్ ఆర్డర్స్ అయితే వస్తుంది. అందువల్ల మన దేశంలో చాలా వరకు ఏపీఐ కంపెనీస్ అన్నీ కూడా వాళ్ళు క్యాపెక్స్ చేస్తున్నట్టుగా అయితే ఆదిత్య ఖెమ్కా అంటున్నారన్నమాట. సో దీనివల్ల ఓవరాల్గా మన ఇండియాలో ఉన్న లార్జ్ ఏపీఐ కంపెనీస్ ఎవరైతే ఉంటారో వాళ్ళందరూ కూడా బెనిఫిట్ చెందుతారు. అండ్ నెక్స్ట్ బయోసెక్యూర్ యాక్ట్ తర్వాత నేను ఆయన అడిగింది, ఆయన ప్రీవియస్గా మనం ఇంటర్వ్యూ చేసినప్పుడు ఏమన్నారంటే ఫార్మా కంపెనీస్లో బ్రాండెడ్ జనరిక్ కంపెనీస్ ఏవైతే ఉంటే వాటి మీద బుల్లిష్గా ఉన్నట్టుగా ఆయన ఆ టైంలో మాట్లాడారు. వేరేజ్ పోర్ట్ఫోలియో మనం రీసెంట్గా చూసినట్టయితే యాక్చువల్లీ బ్రాండెడ్ జనరిక్స్లో ఆయన అండర్ వెయిట్ అయితే ఇచ్చారన్నమాట. ఈ ఓవర్ వెయిట్ నుంచి అండర్ వెయిట్కి రెడ్యూస్ చేయడానికి రీజన్ ఏంటి, అండ్ అలాగే ఇప్పుడు హాస్పిటల్స్ రిలేటెడ్గా ఆయన ఓవర్ వెయిట్లో ఉన్నారు, దానికి రీజన్ ఏంటి అని అడిగినప్పుడు ఆ టైంలోని మార్కెట్ యాక్చువల్లీ బ్రాండెడ్ జనరిక్స్ని పెద్దగా పట్టించుకునేది కాదు. సో అందుకని వాల్యుయేషన్స్ చాలా చీప్గా ఉండేవి. మా థీసిస్ ఏదైతేనో దాన్ని మార్కెట్ కూడా ఐడెంటిఫై చేసి మార్కెట్ ఎప్రిషియేట్ చేసింది. సో వాల్యుయేషన్స్ బాగా పెరగడంతో ఇక్కడ నుంచి ఇన్వెస్టర్స్కి పెద్దగా రిటర్న్ రాకపోవచ్చు, అంటే మంచి రిటర్న్ వస్తుంది కానీ కాకపోతే ఏదైతే వాల్యుయేషన్ గ్యాప్ ఉందో ఆ వాల్యుయేషన్ రీరేటింగ్ రిలేటెడ్ అడ్వాంటేజ్ ఏదైతే ఉన్నదో అది వెళ్ళిపోయింది. కాబట్టి మేము యాక్చువల్లీ ఓవర్ వెయిట్ నుంచి అండర్ వెయిట్కి అయితే వచ్చాం. వెరస్ మేము హాస్పిటల్ స్టాక్స్ రిలేటెడ్గా అన్ని హాస్పిటల్ స్టాక్స్ చీప్గా లేవు, బట్ కొన్ని హాస్పిటల్ స్టాక్స్ అయితే చాలా చాలా చీప్గా ఉన్నాయి. అందులో హెల్త్ కేర్ గ్లోబల్ రిలేటెడ్గా ఆయన మాట్లాడింది ఏంటంటే ఆ కంపెనీ యొక్క క్యాష్ ఫ్లో ఫ్రమ్ ఆపరేషన్స్ టు మార్కెట్ క్యాపిటలైజేషన్ మనం వాల్యుయేషన్ మల్టిపుల్ చూసినట్టయితే 23-24 టైమ్స్లో ట్రేడ్ అవుతుంది. వేరేజ్ మనం మిగిలిన అదర్ హాస్పిటల్స్ చూసినట్టయితే ఇంకా చాలా ఎక్స్పెన్సివ్లో ట్రేడ్ అవుతున్నాయి. సో ఆ వాల్యుయేషన్ గ్యాప్ బాగా ఉండడంతో నేను అక్కడ బుల్లిష్కున్నాను. అండ్ అలాగే ఆయన హోల్డ్ చేసిన ఇంకొక హాస్పిటల్ స్టాక్ యాసిడీమ్ రిలేటెడ్గా కూడా ఈ వాల్యుయేషన్ అడ్వాంటేజ్ వల్ల నేను హోల్డ్ చేస్తాను, అందుకని ఓవర్ వెయిట్ ఇచ్చానని చెప్పారు. అండ్ సెకండ్ క్వశ్చన్ డయాగ్నోస్టిక్స్ రిలేటెడ్. మీ అందరూ గుర్తున్నట్టయితే మనం ఒక 9 months బిఫోర్ అనుకుంటే డయాగ్నోస్టిక్స్ రిలేటెడ్గా ఫుల్ ఫ్లెజ్గా మన ఛానల్లో స్టడీ చేసాం. ఎందుకంటే వాల్యుయేషన్స్ చాలా చీప్గా కనపడడం వల్ల నేను ఆదిత్యని అడిగినప్పుడు హీ సెడ్ సేమ్ థింగ్. నువ్వు ప్రీవియస్గా ఇంటర్వ్యూ చేసినప్పుడు ఐ వాజ్ నాట్ ఈవెన్ హోల్డింగ్ ఒక్క డయాగ్నోస్టిక్ స్టాక్ కూడా ఆ టైంలోని. వేరే ఇప్పుడు చూసినట్టయితే నేను డయాగ్నోస్టిక్స్కి ఓవర్ వెయిట్ ఇచ్చాను. దానికి రీజన్ ఆ ఇంటర్వ్యూ తర్వాత ఆ పీరియడ్లో ఏదైతే డయాగ్నోస్టిక్ స్టాక్స్లో కరెక్షన్ కనబడింది, దీంతో మోస్ట్ ఆఫ్ ది డయాగ్నోస్టిక్ స్టాక్స్ అన్ని కూడా చీపర్ వాల్యుయేషన్స్కి అయితే వచ్చేసాయి. సో అందు గురించి అని చెప్పి నేను డయాగ్నోస్టిక్ స్టాక్స్లో ఓవర్ వెయిట్ అయితే ఇచ్చాను. అండ్ ఇది మాత్రమే కాకుండా ఆయన CDMO కంపెనీస్ రిలేటెడ్గా మనకి సింజిన్ గురించి మాట్లాడారు, అండ్ అలాగే జూబ్లెంట్ ఫార్మా గురించి మాట్లాడారు. అండ్ రీసెంట్గా చాలామంది ఇన్వెస్టర్స్ నాట్కో ఫార్మా లో వాల్యుయేషన్ దొరుకుతుందని చెప్పుకుంటున్నారు, దాని రిలేటెడ్గా ఆయన డీటెయిల్డ్ ఎక్స్ప్లెనేషన్ ఇచ్చారు. Wockhardt రిలేటెడ్గా మాట్లాడారు. సో ఇలా వేరియస్ అదర్ కంపెనీస్ రిలేటెడ్గా ఆయన ఏదైతే వ్యూ షేర్ చేస్తారు ఇండివిజువల్ కంపెనీస్ రిలేటెడ్ మీకు అర్థమైపోయింది అనుకున్నాను, అందుకని దాని రిలేటెడ్గా నేను స్ట్రెచ్ చేయట్లేదు. బట్ ఓవరాల్గా థీమ్ రిలేటెడ్గా ఆయన మాట్లాడిన వ్యూ అయితే ఇది. సో మేజర్లీ డయాగ్నోస్టిక్ స్పేస్లో మంచి ఆపర్చునిటీ ఉన్నది. ఇంకా మోస్ట్ ఆఫ్ ద స్టాక్స్ చీపర్ వాల్యుయేషన్ ఉన్నాయి. హాస్పిటల్స్లో ఆయన 2 స్టాక్స్ రిలేటెడ్గా వాల్యుయేషన్ గురించి ఆయన అయితే ఎక్స్ప్లెయిన్ చేశారు. సో ఆ వాల్యుయేషన్ మల్టిపుల్ యూజ్ చేసి మీరు మిగిలిన హాస్పిటల్ని కూడా ఒకసారి వాల్యూ చేయడానికి ప్రయత్నించండి. సో మీకు ఏ హాస్పిటల్ చీప్గా కనబడుతున్నారైతే వాటి మీద ఫర్దర్గా రీసెర్చ్ చేయడానికి అయితే ప్రయత్నించండి. ఓవరాల్గా మనం మాట్లాడుకోవాలంటే హెల్త్ కేర్ ఈస్ ద థీమ్ వేర్ వీ కెన్ మేక్ వెరీ గుడ్ మనీ ఇన్ నెక్స్ట్ 1 decade అన్నమాట. సో ఈ థీమ్ని స్టడీ చేయని వాళ్ళు తప్పకుండా స్టడీ చేయడానికి అయితే ప్రయత్నించండి. అండ్ ఒకవేళ ఎవరికైనా ఇండివిజువల్ కంపెనీస్ రిలేటెడ్ రీసెర్చ్ చేయలేని పక్షంలో బెస్ట్ థింగ్ ఈ సెక్టర్లోని మనం ఫండ్ అప్రోచ్ ఫాలో అవడం. సో ఫండ్స్లో ఇన్వెస్ట్ చేసినా కూడా వీ కెన్ మేక్ డీసెంట్ మనీ అన్నమాట. సో మంచి ఫండ్ మేనేజర్ని సెలెక్ట్ చేసుకుని మీరు ఫండ్ ద్వారా ఇన్వెస్ట్ చేసినా కూడా మనం ఈ థీమ్లో వచ్చే అడ్వాంటేజ్ని అయితే పొందొచ్చు. ఇది ఈ వీడియో ద్వారా మీకు షేర్ చేయాలనుకున్న ఇన్ఫర్మేషన్ గైస్. వీడియో మీ ఫ్రెండ్స్ అండ్ ఫ్యామిలీకి డెఫినెట్లీ హెల్ప్ఫుల్ అవుతుంది కాబట్టి వాళ్ళకి తప్పకుండా షేర్ చేయడం అయితే మర్చిపోకండి. వీడియోని లైక్ చేయనట్టయితే వీడియోని లైక్ చేసి ఛానల్కి అయితే ఫస్ట్ టైం వచ్చినట్టయితే ఇలాంటి ఇన్ఫర్మేటివ్ కంటెంట్ చూసి మీ ఫైనాన్షియల్ నాలెడ్జ్ని ఎన్హాన్స్ చేసుకోవడానికి ఛానల్ సబ్స్క్రైబ్ చేసి పక్కన బెల్ ఐకాన్లో ఆల్ నోటిఫికేషన్స్ని యాక్టివేట్ చేసుకోండి. నేను సాయి కృష్ణ పత్రి మరొక మంచి వీడియోతో మీ ముందుకు వస్తాను. టిల్ దెన్ బాయ్, టేక్ కేర్.